Hello traders, today is June the 30th. My name is Evan Hornsey. I'm a market and trading, and today I'll be looking at an intraday trading strategy. Okay, before we actually get into the strategy, just wanted to explain, it's the end of the month. We have seen some end of month flows, but it hasn't really given us any opportunity to trade on a daily time frame. We're hoping to sort of stay with the daily trend, but the month of June has basically been a sideways move. So with no real strategy entries on the daily time frame. So I'm going to basically use the same strategy, but then move it also down to an M30 chart. Now, the reason for this is I created like an EA on the MT5 platform, and I've been back testing it whilst, in the background. So if I just show you those results, so you can see here, we go back up to the 16th of May and made an initial deposit of 12,500. And if we go down to, what happened today, so this is the 30th of June, and we've got essentially just over £1,000 worth of wins. So, relatively good. You can see that there are a lot more trading opportunities on an intraday time frame. If we get days like today where we've got the Swiss franc, which is weak, and the Japanese yen, which is strong, obviously there's no real clear risk on, risk off direction. So there's no real trend. That's been kind of happening throughout June. So rather than not having anything, to show for the end of the month, I thought I'd basically move down to an intraday time frame. Today we've got some decent news out. I think it's the market's focus for this week, which is US core PCE. This is the inflation index that the Fed have said that they look at the most. Obviously, we know that they look at the University of Michigan, they know that they look at the CPI, but it's this PCE price index that, we think they consider to be the best guide for inflation. We're looking to see if we get 4.8% as expected, which would come in lower than the previous reading. So that would, hopefully signify that inflation has peaked and is rolling over. We do also have US initial jobless claims coming out at the same time. So if we have a decent number there, that might be overrun by what happens in the market following the core PCE data. Right, so got another new platform, new £10,000 balance. You can see if I go to the history, click on the arrow down here, just deposited 10,000 potential dollars on this demo account. Now, the reason for doing it on demo is just to sort of show keep score essentially of the trading ideas. Is the strategy worth continuing with? Obviously, with a daily time frame, only really making a 1% in the month, that's not exactly bad. We didn't lose anything, we just didn't get very many signals. So I want to see if we can up the signal rate at least. So setup and filter is basically, we want to see the price action on the daily time frame below the 200 period moving average here in yellow. We also want to see the previous day's close below the 9-period moving average here in blue. Now, price action, we obviously want to see lower lows and lower swing highs. That's a good downtrend. And you can see that the euro versus US dollar has been in that downtrend, for quite some time. Now, rather than waiting for a close above the Bollinger Band and then a close back below the 9-period moving average, we're basically going to move down to an M30 chart. Use the same sort of filter and setup. So we're nearly the same setup. The filter is basically, we want to see price action on the M30 chart following along with the daily time frame, also below this 200 period moving average. And then what we want to see is the following thing, where we get a close below the Bollinger Bands, and then we look to take a short from there. Now, the reason for this is we're essentially looking for a breakout trade now. So we're going to go short on the close below the Bollinger Band. The actual stop loss is going to be the same distance as the range of that signal candle. So you can see here, this signal candle here closes below the Bollinger Band. So that's the size of our risk. Where the next candle opens is where we're going to open our trade. We're going to leave the risk, in terms of the same as the range as the previous candle. And then the take profit will be a risk to reward ratio of 1 to 2. Now, I'm not just going to do like one contract. I'm going to sort of split the trade up into a couple of trades. And I'm essentially going to be looking for a risk reward ratio of 1 to 1 for initial profit. So that would be halfway there. And then we're going to, once we get that initial profit, we're going to collapse the stop loss to where we entered, so there's no risk of losing any money. And then we're going to let the trade run until 9 p.m. And then wherever the trade is, should we have one on, we're going to basically collapse the trade at 9 p.m., keeping this an intraday trading strategy. So just to reiterate what's going to happen, got the daily time frame where we're looking for price action to be below the 200-period moving average, the previous day's close to be below the 9-period moving average. Obviously, it's good to see lower swing lows and lower swing highs in a downtrend. Then we're going to move down to an M30 chart where we're going to look for a setup. Ideally, we'll get a squeeze in the Bollinger Band, so we'll have an expansion and then a squeeze. That will obviously happen during the overnight session. Then we're going to look for a breakout of the Bollinger Band. So, potentially, if we're at our trading station at, say this time of day, 3:30 in the afternoon, we look for a signal candle where we basically define our risk. Then we look for the next candle open as our entry. Then we'll be targeting a risk reward ratio of 1 to 2 for most of the trade, but we're going to take half off once we get to a risk reward ratio of 1 to 1. Collapse our stop loss to 0, so we lose nothing for the remainder of that trade. And then at 9 p.m. we close everything out, so this stays an intraday trading strategy. All right, so today, if we're at our trading platform at 11 a.m., we could have taken a short today on the euro versus US dollar. That would have looked something like this. So we'd have had this signal candle where we could have defined our risk. Then at the open of the next candle, that's obviously where we look to trade. Then we've got a risk reward ratio of 1 to 2 that we're trying to aim for, with obviously a risk reward ratio of 1 to 1 for the initial target. So once the trade had got through that level here at 1.04089, we would have then taken half our profits, and then we would have collapsed the stop loss so that we didn't have any other sort of potential losses should this reverse. Then we're going to let it carry on until it hits take profit, or until 9 p.m. tonight when we'll close the trade. So that's the new intraday trading strategy, very similar in terms of what the previous strategy was like on the daily time frame. We're just looking to see if we can get more signals. Okay, good luck today. I'll speak to you again tomorrow.